Welcome to the Deerwood Realty YouTube channel. I'm John Schenk, founder and managing broker of Deerwood Realty here in St. Louis, Missouri. You know, got a fascinating topic today because I work with buyers and sellers all the time. And so this particular article isn't a surprise to me. And I'm bringing it to you because I think we can discuss some of the things that might go wrong with the setup. But I find this to be an odd thing, and we'll get to it in a minute. But do you think it's okay for parents to help their children with down payments for new homes or homes of their own? I don't have any issues with it because as long as I've been in the business, some kids need help from their parents and some kids don't. And I oftentimes will ask ahead of time, you know, how are we planning on financing this? Because if they are planning on getting a gift from their parents, then we need to get that letter over to the lender, and the lender needs to be made aware so that they can, you know, file the correct paperwork for the loan. So yeah, I'm not surprised by this, but I kind of wanted to go through it because what I really think, I'll put it to you up front, is houses are super expensive right now, you know, in terms of affordability. But, you know, they've always been kind of expensive. You know, it's not anything new. Some of the things like in St. Louis, you know, if you're trying to buy a house in Clayton, you're probably at $800,000, right? Like any house in Clayton. And if your family's from Clayton and you have great jobs and you're starting in professions that have, you know, you don't have too much, you know, debt. I mean, maybe your parents help you out in Clayton, which is crazy to me, but not surprising. You know, if I were that person, I would say, can we move you to someplace else where you could, you know, maybe buy a starter home relatively, like maybe in the slums of $300,000 in St. Louis? Do we really have to be in Clayton on our first home? But you know, if a buyer came to me tomorrow and that exact scenario played out, I would say, okay, let's do it. I don't have any issues with it. So let's get into this article. It's on CNBC, and it says, to buy a house in today's market, more people turn to an alternative lender, their parents. Now, look, I think that we've seen, going forward here, we've seen some things like there was the article about multi-generational housing, that people, you know, wanted to live in the same house as their grandparents and their parents. And I said, I think that's fine, except for it's possible that this is a reaction to the fact that homes are too expensive. I feel the same way about this. I think it's fine, but I think this has always been an issue. And the article basically is just rehashing what has been the case for as long as I've been a real estate agent. I've been a real estate agent for quite some time. It's getting to be pretty wild. But, you know, let me know what you think. So let's get to it. Here we go. Let me switch over here. It says, buyers turn to the bank of mom and dad. First-time buyers cobble together down payment sources from at least two places. Zillow's chief economist Skylar Olson recently said on CNBC's Last Call. Some of that is hard-won savings, she said, and the other part is, say, a gift from family and friends. In fact, roughly 40% tap the bank of mom and dad, up from only one-third pre-pandemic, Zillow found. That's a pretty privileged network. Now, look, to me, you know, one-third is like 30%, 33%. So a 7% increase, you know, I just don't think that's a big deal. Honestly. I mean, the houses are more expensive now. I don't think this is something new, is what I was saying. It says, to bridge the gap, a growing share of younger house hunters are now considered Nepo home buyers because they rely on family money to complete their purchase. Nearly 40% of recent home buyers under the age of 30 used either a cash gift from a family member or an inheritance to afford their down payment, Redfin also found. So they're at 30. 40% of home buyers under age 30. And I mean, I don't think this should be a shock. I mean, I just don't see it as being surprising. It says, despite the hallmark of the American dream, close to 3/4 of would-be home buyers said affordability is their greatest obstacle, a recent report by Bankrate found. In fact, housing is far less affordable today than any other time in recent history, several studies show. Well, right. But I'm just saying that houses have always been relatively expensive for young people, at least as long as I've been around. I mean, in 2008, or I think it's 2007, I bought my house, and I mean, it was $180,000 at the time, and that was ridiculous. That was just a mansion for me. So I just find it to be hard. I just find it hard to not relate, because I remember not having a ton of savings. I mean, I tried, but I don't think it's that big of a deal. And then at its peak in 2006, before the crash, the payment to income ratio was 34%. In late 2023, the payment to income ratio is 40%. So yeah, not a surprise. Not a surprise. I mean, you're also seeing this, like, people are paying more in cash. Now, is that a great idea? I don't know. I mean, people are doing it. It's a response to the financing, though. Financing is too expensive, then why should we finance? We'll just pay in cash. It says a down payment isn't everything. And I really wanted to go over this part of the article because I thought it was the most important. I think there's a lot of misconceptions out there. So it says often it's the down payment that seems particularly daunting. However, there are options, noted LendingTree's senior economist Jacob Channel. Though they are important, buyers should remember that a down payment isn't everything. And even if you don't have tens of thousands of dollars you can put towards one, that doesn't mean you won't be able to buy a house. Now, there's the down payment, and then there's the payments you make every month. And a lot of people do believe that you have to have 20% down. And that's not true. And also, what I would say is one thing, like, there are different types of programs where the down payment isn't that bad. And so we'll continue in this article. It says, while a 20% down payment is still considered to be the standard, the federal government, states, banks, and credit unions all offer programs with much lower down payment requirements, or even none at all. Keep in mind that many lenders and specific loan options like FHA mortgage don't necessarily require particularly large down payments, Chanel said. So look, FHA, you probably get in for, I think it's 4.5% on a down payment. Don't come at me if I'm off by 0.5%. But that's one rate. If you can get to a USDA loan, those are 100%, no down payment. So, is it worth, like in St. Louis, is it worth going out to maybe look at High Ridge, 30 minutes away, to get a USDA loan? I mean, that's where I think that, working with a real estate agent, a buyer's agent in the beginning could be really helpful in just deciding, like, okay, well, how can we get the best home for you? So what do you think? Is it wrong? Is it wrong to do the parents paying the down payment? I wrote up some ethical considerations. I wanted to kind of put those forth. So there's one, it's the fairness among siblings. So if you have like 3 kids, are you going to be able to do down payments for all 3 of them, or just the one that needs help? And will that engender, issues with the other siblings? Another thing is long-term financial security for parents. Like, so what if your parents aren't flush with cash and they want to help, but they really financially shouldn't be helping? They should just continue to be paying their own mortgage. And then another idea is, this I think is a little outdated, the dependency versus independence. While parental help can be a tremendous boon, it might also affect the child's sense of independence and self-reliance. Are the children learning to manage their finances responsibly, or is this creating a pattern of dependency? Well, I don't think so. Again, because I think houses are so expensive right now. I don't see how you can get out of it. And then there's an interesting one. It says, impact on the housing market. On a broader scale, significant parental financial assistance can contribute to inflating home prices. If a substantial number of buyers are entering the market with additional funds from parents, it could drive prices up, making houses less affordable for those without such support. If you think that the housing market is in any way fair and not rigged, you are misguided. People are always going to have more money than you. People are always going to have a better financial situation than you. And as far as worrying about that driving up the housing market, how is that I mean, I think that's less of an issue than an investment company buying a single family home. I mean, and just turning it into a rental. I mean, let's be honest. That's something we don't really need to worry about too much. The expectation of return, I thought that was an interesting one. Is there an expectation of repayment or some form of return on this investment from the parents? How are these terms communicated and agreed upon, and what happens if the child cannot meet these expectations? Well, it's a very interesting question. And then an impact on relationships. Financial transactions between family members can complicate relationships. It's important to consider how this arrangement might change the dynamic between parents and children. Clear communication and setting boundaries can be vital. But look, haven't these kids already? I mean, haven't you already worked with your parents and to buy a car, or maybe there was something you wanted to save up for one time and your parents helped you? I mean, shouldn't that be kind of the direction that you would go in on this on a house? This shouldn't be new. And then one of the interesting things about the expectation of return, if your parents are giving you a gift for a home, I think you have to put in the gift letter that you have to supply to the lender. It has to say this is a gift and it's not a loan. There's one real good reason for that. Your debt to income ratio, if it's a loan, it adds to the debt to income. I would think, I am not the perfect mortgage guy, but I do know it has to be classified as a gift. So that's what I've got for you today. Let me know if it's okay for your parents to help you with a house. Let me know if it's not okay. I think it's fine, but maybe I'm wrong. So with that, I'm going to head on out. Thank you for watching. Thank you for listening, and I'll catch you on the next one.